Welcome to the Asian Connection Mortgage Podcast, where we connect Asian Canadians together to talk about anything related to real estate, mortgages, and finances, based out of Vancouver. Our host is John Lee, mortgage broker with Arise Mortgage. Grab a bubble tea and enjoy the episode.
Hello, everybody. Welcome to another episode of the Asian Connection Mortgage Podcast. I'm John Lee, mortgage broker in Vancouver, and we're going to be talking about the pre-approval process today. So if you're thinking of buying a home or you are a first-time home buyer, trying to figure out what to take for the next step, this episode is for you because I'm going to walk through exactly what to expect, what documents you're going to need, and some of the things that you may or may not know when it comes to pre-approvals. And we just want to make sure that this process is as smooth as possible for you. So let's get started. Um, let's start with what exactly is a pre-approval. So first things first, pre-approval is not the same as being pre-qualified. I know the whole pre is the same, but one's pre-approval, one is pre-qualified. So pre-qualification is simply a educated guess. So basically, would tell your bank or your mortgage broker your income, and your debts over the phone or Zoom. They do a quick math and they give you a ballpark number. So it's it can give you some sort of idea of what to consider, but pre-approval is the real deal. Like, so what we do in the pre-approval is review all your documents, pull your credit, verify your income, employment, and you, depending on the lender, you actually get a pre-approval letter, and we are able to lock in your rate for generally about 4 months, so 120 days. Pre-approval is also very strong as well. If you're looking into working with a realtor, that's usually the first thing they're gonna ask, because if you do have a pre-approval, it shows that you're serious. It shows the seller that you're serious as well, and that you're not just playing games and submitting offers just for fun, or just like doing window shopping or something. Uh, it means that yeah, you're serious. You have the cash available, all your financing all intact, and you're ready to go if you do find something. So what is the process? So first off, you got to book an appointment with me. I'm gonna send you a link, and um, based on our availabilities, you'll just pick a date and time, and you're going to get a Zoom link automatically. So we're gonna be on Zoom, and prior to the meeting, you're going to be receiving an intake form as well. So for this form, we're going to share with you, share with me your basic information like your name, date of birth, income, and so on. So everything that I would need to ensure that on the day of the appointment, I can easily run numbers and also provide you with more than just numbers, more like a consultation tips. If you're a first-time home buyer, like what are all the different things that you can take advantage of from the government? So then once we run the numbers and the numbers actually work, then we're going to proceed with requesting for documents. So what documents do you need? So it really depends on basically your job. So first off, the most common will be if you're an employee and you're full-time. So what do we need? So we're going to need your letter of employment. This is simply a letter from your employer that states your position, salary, start date. We'll need your last two pay stubs. If you receive bonus or overtime and you want to take that additional income into consideration, then we'll also need your last 2 years of T4s. Um, and then now for self-employed, this is a little bit more, okay? So for self-employed, if you have chatted with other mortgage brokers or bank, it is more complicated. It's more paperwork because for self-employed individuals, your income is variable, and banks don't like variable. They like steady, Eddie. And so what they look at is your last 2 years of complete tax return. So that includes your T1 generals and notice of assessment. If you are incorporated, well, it's even more documents. We're going to need your financial statements for your corporations as well, your registration documents like your business certificate, notice of articles, and we also will need your tax returns for your corporate as well. Now, we also need to take a look at where your down payment is coming from and your assets. So generally, regardless of which bank or credit union you want to proceed with, they will want to look at your last 90 days of your money history. Generally, they'll want your bank statements. Uh, so we are required to know exactly where the money is coming from for the past 90 days. So bank statements, investment account statements. If you are receiving a gift, we're also going to need to see that deposit in your account, plus a gift letter as well. And don't worry about the gift letter. Each bank has their own template, so we can set that up for you. But we will need to have paperwork to show that this money is a gift. You don't need to return it, or you're not borrowing it from your family members with interest. Or if you are looking to sell your place and then purchase a place, well, then we'll also need to see the proof of sale of the existing property. Next, we'll also need to take a look at your credit and debt. We will pull your credit with your consent. And once we pull it, all your debts will be listed out. If you have other properties, we'll want to know what your property tax amount is for those properties and whether or not it's paid in full. And if you are renting any other properties, we'll need your tenancy agreements and bank statements to show that you are receiving the rent. So, long list. And if you think you might need it, just share it. It's better to have more documents than to delay your approval when you do have an accepted offer. That process, to be honest with you, it is very tedious, especially for those who are business for self and have other properties. But for those who are first-time home buyers, your employee, it's actually not too bad. Um, so depending on the situation, we will give you a list of documents required. So what happens after that? So once we receive it, we will have a review of all your documents, complete the mortgage application, and also let you know if we're missing anything. Some things that may come up will be like, say, you send us bank statements, but it doesn't have your name or your account number. Lenders scrutinize every single document. And if we don't need it, we won't ask it because we know it is very annoying. But there will be some back and forth and be like, hey, you sent us this. We actually need this. Can you follow up? So please be patient. Um, so as part of filling out the application form, we will pull your credit and really then run the numbers. And then what will happen is we will send it out to a couple of lenders to lock in your rate and also get back to you for a review of our findings and determine what type of rate and term that we should proceed with and to lock in. So this whole part should take about 3 to 5 business days. If it's a lot more complicated, then maybe 5 to 7, but it shouldn't take more than a week. So what are lenders actually really looking for when it comes to approving your mortgage? So number one, I mentioned already, income stability. They want to see consistent income over time. And we do know that you may change jobs. If it is in the same industry, it's fine. We can get an exception from the lenders, especially if you are getting a higher pay. That is something that's healthy. But if you are switching to something that is completely new industry, then we will need to wait until your probation period is over. If you're part-time, that's also going to be an issue. If you don't have guaranteed hours. If you're part-time without guaranteed hours, they'll likely want to see 2 years of history. So if you're looking to purchase place and you have part-time, see if you can negotiate for guaranteed hours or uh, transfer to a position that offers full-time. Number two, credit behavior. So generally, a good score is 680. And they will also take a look at your payment history. That's the most important. How much credit utilization you are having. So if you have $10,000 worth of credit limit, but you're only using 1,000 or 2,000, that's great. But if you're getting close to the 10,000, like 9,000 or something, then your score will be lowered and they're gonna ask a few more questions as to why you're borrowing so much and so close to the limit. They're also going to see your credit history. So how long have you had a credit history in Canada and the type of credit. So they want a mixture. Credit card is usually the most common, but do you have a car loan? Do you have line of credit? Do you have a mortgage? A good mixture improves your score and also shows that you have experience with different types of credit products. Down payment. So yeah, like I said, they will trace every dollar. Not every dollar, but if there is a deposit, say like $2,000 or $3,000, they're gonna ask where that money is coming from, and they're going to flag it, and they want to see the source. So a good tip is make sure you're not moving money around if you're looking to purchase. I know some clients, they're like, oh, I know I need this money, so I'm going to transfer everything into my checking account and just add everything together. Yes, that may seem like a good idea, but do that after everything has been verified because once they see money move, they're going to want to see paper trail for every dollar that gets moved. And that may require more documents. So if we want to minimize the documents, don't move your money just yet. Just keep it where they are, and we'll need the 90 days of all those accounts. Um, yeah, so what are things that will kill your pre-approval? So once you are pre-approved, don't make these mistakes, okay? So number one, like don't um, find more debt. So if you're pre-approved already, don't get like another car loan, don't get furniture financing. That really messes up your numbers and your ratios. It decreases your score, decreases the amount you may borrow. So don't do that. Um, Wait until the mortgage is funded, then you can get any new credit you want. Number two, don't change your jobs, especially if it's a different industry. If you do want to, make sure you talk to your mortgage broker first or your bank to see if it is okay. There is a way that we could make it work, but don't give us an unpleasant surprise where you change your job, then tell us, because that will affect your pre-approval. Um, Number three, unexplained deposits. So make sure every large deposit, like I said, we can trace it. Incomplete application. So if you're missing one document and for whatever reason it's taking longer than expected, well, that may delay your application. So just make sure you are proceeding as fast as possible. I know some things may take a little bit longer, like a job letter, because it's out of your control. But things that are within your control, most likely you can just log into your online banking, download it, and send it over, and that should be it. And lastly, just also know that pre-approvals is good only for a certain period of time. So if you're pre-approved, also make sure that you are doing your part to try and find a place. Or else after 4 months, then you have to redo everything again. It's not fun. Getting additional documents or updated documents. Um, so make sure, yeah, you're just doing your best to look and purchase for a place. Now, what if you're looking to be pre-approved, but you're not really at that place yet? You may want to clean up your credit first. So if you know that your credit's not that great, or you just came back from a vacation and you wrapped up your credit card, well, maybe we may need a little bit more time just for you to repair, pay down your debts first, so it looks prettier when we send it to the lenders. And tip number two is on top of the down payment, also make sure you have additional cash in place. There's something called closing costs that can be quite a lot, especially the property transfer tax. Closing costs can be about 2 to 3% of the purchase price. So that can be quite a bit. And this is on top of the down payment. So make sure you also have that in place because closing costs comes at usually at the very end when you sign with the lawyers, which is usually like the week of the completion date. And if you're scrambling to get like 10,000 or 15,000 during that time, it can be really stressful on top of you looking uh to move as well. And yeah, so once you do have the pre-approval, uh yeah, just make sure you protect it. Use it as a negotiating tool as well. Uh, and let your realtor know so then they know you're serious. And if they do see that pre-approval letter, they will work a little harder for you because they know you're serious and they want to get the deal done. Make sure you stay in touch with your realtor and also the mortgage broker as well. Um, if there is a property that you do like, you can always send it over and then I'll be able to run the numbers for you specific to that property. Because every property is different. The strata fee, property tax may be different. A house may or may not have a rental suite. So there's still a lot of just adjustments to be made, even though after pre-approval. Because during the pre-approval time, we actually don't have a property. So we're just using best guesstimates of what that property uh, housing costs will look like, and we input that in. But if you do have an actual property, it's always best to send it over so then we can run it specific for that property. Well, what if you do get declined? Like, say, common reasons to get declined is probably like your credit's too low, income's not enough, you have too much debt, you have issues with your down payment source. Well, what we want to know is more information. Um, we probably know why you got declined, and you probably want to work on fixing those issues. Uh, as a broker, we do have other resources as well. Usually, banks they offer the lowest rate, but their lending guidelines are the most strict. We do have other alternative lenders that may consider your situation, but expect rates to be higher. So if you are just really set on wanting a mortgage at a bank, you may want to wait until 6 to 12 months just to improve your situation, or you may want to consider a cosigner to bump up the income or to um, improve the credit score. So just make sure, if you're declined, it's not like you're declined for the rest of your life. There are ways to improve your situation, and we can always try again. So yeah, just want to conclude everything that the pre-approval is not just getting a number, it's also about understanding your financial position and preparing for the biggest purchase of your life. You're buying a house. That's crazy. It's at least $500,000 uh, in in Vancouver. So it's a really big purchase. So there you go. This is the your guide to mortgage pre-approvals, and I really hope that you found this helpful. If you know anyone who you think would benefit from this, share it with them, and hopefully they'll contact me for a pre-approval. You know where to find me. All my contact information is in the show notes. Book an appointment. I'm happy to connect with you. So thank you for listening to another episode of the Asian Connection Word Podcast. Until next time, I will see you in the next episode. Take care, guys.
Thank you for tuning in. If you enjoyed today's episode, please consider giving us a review and subscribing to our podcast on your favorite platform. Thank you for listening, and we'll see you next time on the